If you have watched my weekly video on talking about the S&P 500, then you probably know what I was watching. And right now on this video, we're going to take a look at the ES, the E-mini S&P 500 future, and also the NQ, which is the NASDAQ 100 E-mini NASDAQ 100 futures. As a disclaimer, be sure you understand the risks of trading futures or any sort of derivatives such as options or any kind of financial instrument, and do your own diligence before you risk any money. And the information, the content in this video is purely for informational and educational purposes only. These are not trade recommendations or investment advice. So trade at your own risk. Use these information at your own risk. All right, with that said, let's go and take a look at the ES here. This is the ES for the month of August. And you can see I have the composite profile here. And you see that this is the point of control for August, which is 29, 24, 13. So we round that off to quarter of a point. Each tick on the ES is quarter of a point. So it's basically 29, 24, 25, somewhere around there. It's not accurate because this is a Thinkorswim platform and it is not based on tick data. And we also have a value area low at 28.60, 50, and a value area high at 29, 39, 25. Okay, so those are the composite volume profile levels for the month of August. And in the S&P video, S&P 500 video, I was talking about, when the price was up here, basically, it could come down, right, to this level here, somewhere around the lower level of this range, the 20x17 area, or it could come up and then come back down and do a back test and then come down. So essentially, trap the anxious long. Then we also have another one that would basically come up here, come back, and then break out to the upside, getting it back up to that 3,000 area and trap these shorts down here. Okay, so those are the scenario that we're looking at for the S&P 500. So now you can see on the ES after a couple of days, this basically here, this low volume area essentially got filled a little bit, and right now today is kind of pushing up into this upper bound here, this 29.44. Remember the scenario, right? When it get up here, it could come break out of this 29.44 and then come back in. And possibly what we're looking at is to see would it come back in at the 29.36 and below. So that would get the short get all excited because they probably are looking at this thing to come retrace back down at least to the value area low here, the 28.61 and a quarter. So retrace the value area, and instead then might have a little bit of a fake breakdown and then break out again and get above the 29.44. And then come up to this 3,014 and a quarter. Okay, that's the one possibility, or it essentially just come up, fail to stay above the 29.44 and then come back down, like I said earlier, and come down to this 28.17 and 3/4, then we're probably looking for a breakdown. Now that one scenario essentially that basically just coming down right now, it doesn't appear to be the likelihood because right now basically check the low volume zone and then coming up. So the only thing is that it could come up here and fail to stay up and then come back down, or it just break out, trap the short, right, come back in, trap the short down here and then break out and then have them short cover running short squeeze and squeeze it up to the 30.14 and a quarter. Right, that's the ES. And here we are looking at the NQ similarly to the S&P 500. Right here is the point of control for the month of August, 77.29, 75, and here's the value area high, 77.82 and a quarter, and the value area low, 75.18. Right. So we also have a low volume zone. I forgot to mention that on the ES. Right. There's a low volume zone here left behind by the month of August. So those are the areas that we're kind of keeping an eye on to see, would it be able to cut through and come up. Right. So right now we're essentially looking at last week's scenario on the market is basically, come up, right? And maybe come back and back test it, and then come back down, right? So that's one possibility, and then the other possibility is come up, break out, come back down, trap short, and break out again and come up to this 8,000 area and possibly to the all-time high for the NQ, or it basically just come down and dip down to test the lower boundary of the 73.88 and a quarter and possibly break out, break it on the downside and come down and check this low and basically and then go and double check the June low. Okay, so that's basically the month of August. This low volume zone kind of fill out a little bit. As you can see, it's also coming up and try to get up to this 77.82 and a quarter. So again, we're going to look at the scenario where it come up and break above it and pull back in and then break again to trap the short, or would it basically just come up and fail to make any move to the upside, then it will basically pull back and come down to that 73.88 and a quarter and then break down and check this low and also the June low. So some of the possibility on the trade here, if we take a closer look at this, this price formation here, if we put up the Fibonacci retracement here on this right here to this low here, let's say you put in the, get in on the 78.6 and you put in your stop on the other side of 50, okay? And we'll take a look at what the R sides are. Okay, so if you do 1R, basically break out of this trading range, and then 2R is getting close to this peak. So, 2ER, then you're basically looking at the all-time high, new all-time high. So again, it's all depend what is the R size that you're using, right? That you're risking, and what is your risk parameter. That's why trading is more of risk management than actual setup. Okay, because again, we could also look at this here, right? Let's say you are trading today's, trade on the 78.6. So let's say you want to get in here, and you want this to be your stop. Then you could see that on a 1R, basically coming back to the high of Globex last night, right? And so basically a little bit above overnight high at 77.34, and then 2R is 77.69. If we get up near the peak here, and that's pretty close to 9R, that's a possibility. Right? So again, it's all personal depending on what your risk is, and it's all about risk management. Just because we got this setup doesn't necessarily mean they're going to get there, right? So, but at least there's some parameter around it, and you can see what are the possibility. All right. So good luck. If you like the content in this video, be sure to click the thumbs up to give it a like. And if you're not a subscriber on my YouTube channel, click on the subscribe and the notification icon so you won't be missing any of my future video. Thank you for watching.